Join us for a two-part interview with Philip Blows, an entrepreneur who made a move from geology into the world of investment and now, 20 years later, has created a platform that tames the wild west of cryptocurrency investing through a stable, predictable investment platform. If you're into crypto or want to be, stay with us for our interview with Phil.
I am really passionate about packaging it and making it understandable to everyone, democratizing the whole process. And I think that journey has taken me to the world of crypto eventually.
Okay, let's get into this. The majority of North Americans invest in the stock market, and most accept the fact that success comes by playing the long game. But a lot of investors, especially those just entering the market, have been attracted by the almost daily reporting around what's happening in the world of cryptocurrency. Investing in the traditional stock market has actually been on the decline. Research suggests partly due to a lack of confidence connected to the crash that happened in 2008. But one exceptional area that's seen explosive growth has been the area of crypto. It landed on people's radars in 2010 when it experienced its first major price jump, going from a fraction of a penny to 9 cents. And now, over a decade later, we've witnessed Bitcoin, one of cryptocurrency's leaders, peak at over $68,000, and even today, it closed just over $2,000. And while research from Bankrate shows that lack of knowledge holds people back from investing, every day the uninformed flood into the market through a fear of missing out because of the hype around crypto. And this flood does a lot to create volatility in the marketplace, and volatility means risk. And that's where this episode's entrepreneur comes in. Philip Blows began his career as a geologist, little expecting that he'd shift his focus from mining for rocks to overseeing the mining of cryptocurrency. With 20 years in asset management and retail trading, Phil co-founded AQRU, a platform that helps investors capitalize on the potential benefits of cryptocurrency, but in a more stable and predictable manner. Of course, crypto as a subject is kind of cool and interesting, but there's a bigger lesson from Phil, and that's the wisdom gained through experience working for others can be applied to creating an entrepreneurial venture that's a safe haven for consumers newly discovering exciting new markets. Well, let's get to Phil. I am so excited to welcome Philip Blows, who is a co-founder and CEO of a company in the UK called AQRU PLC, which is a crypto trading platform that helps investors track their yields against their crypto investments. So obviously we know crypto is a very, very hot part of the market and people are interested, and there's a whole lot of misinformation out there about what crypto is about. Now, we're going to get into a little bit about that, but remember, with the creators, we are interested in talking to entrepreneurs about their journey. What's interesting about Philip is that he is coming from a background where he studied geology 20 years ago and now is in the financial space. So Philip, I'd love to welcome you to the creators. Thanks for joining us today.
Pleasure. Thank you very much for having me.
So let's go back and talk about how a geologist is mining for rocks becomes mining for cryptocurrency. How does that journey work?
Yeah, so I originally did geology. I chose to do geology because I was a difficult kid to keep in the house, and it seemed like the only degree where I could spend most of my time outside. So there was very little thought other than that, and I could be found whilst at university panning for gold and things like that in streams around Yorkshire and places like that. So yeah, it was a really cool. Leeds in north of England was a great place to go to uni and make some long lasting friends. But yeah, I think whilst at uni and certainly during school, I'd always been reading about finance, and that was, I think, towards the final year of my degree, I was paying less and less attention to geology and more attention to just the world of learning as much as I could about investing, about trading, all these sorts of things. So, first job out of Leeds was straight into a foreign exchange company where I was helping retail and institutional investors just move their money around the world and get the best interest rate for it. That quickly turned into a role where I was actually trading and helping people invest their money more directly. And I was quite fortunate that one of my bosses left and his boss left. I ended up in some very early 20s running a trading business. which had tens of millions of pounds of retail institutional money that we were getting very, very high returns on. So that was a great kind of period, and I went back to the original company, started another desk, and sort of spent really 10 years just in a variety of roles within finance, but always with sort of very much taking quite complex topics in finance and packaging them in safe and easy to understand ways, and then really selling those solutions, investment products to institutions and retail investors. And I think that's kind of a theme that I was, that kind of underpins a lot of what I've done with my career. Is I've always felt really passionate about the fact that often the people who get the least help with their money are the people who need the most. And so, as opposed to just giving high level banks and ultra high net worth individuals access to kind of financial products that can really help people, I am really passionate about packaging it and making it understandable to everyone, democratizing the whole process. And I think that journey has taken me to the world of crypto eventually. And I think the main reason for that was, I was, having been in traditional finance, I was starting to delve into crypto and seeing it was actually, despite what many people think about crypto, it was actually solving a lot of the problems that everyday people have, which is how do I earn high yields on my money, or how do I get any kind of yield? Because at the moment you park it in the bank and you get nothing. And I was looking at the world of crypto and saying, hold on, there are ways here that you can fairly safely generate, consistent returns in, say, US dollar type deposits of up to, say, 12, 13, 14%. So I sort of saw that. I saw a way to simplify the whole process, build an app that people really, really liked and could engage with regardless of their kind of investment experience or their investment knowledge, and educate them along the journey to get them to understand everything that they're getting when they invest in these products. And that was kind of where AQRU came from.
Huh. Now, I'm curious about that because I remember I came across an amazing study that was done in the United States about why people are better prepared in terms of their financial futures. And it suggests that only about 8% of people actually have proper advice or proper knowledge about how to invest. And that one of the biggest factors that puts people off planning is the complexity of the information out there.
Yes.
So when you look at so it's interesting to hear that, being in the business, you went, oh my God, imagine being a layperson. This would be nuts trying to understand this. But I'm curious, the investment market is this big. So why crypto? Why not a broader focus?
I think, I'd worked in a broader area of finance beforehand. So I'd had a really kind of unique experience over 4 years where I worked for a fintech in the UK, which it was kind of just you'd log on to this portal, you'd go through a very quick kind of assessment, and on the back of it, it would give you very, very broad tips around how to improve your finances. So we would get this information, and we I think over the course of 4 years, I ended up actually individually speaking to about 10,000 people in this space. So really getting an understanding. And that was the best bit of consumer research I could ever have done for what I'm doing now. And what we found was there was a huge proportion, something like 60-65% of people are getting to the end of every month in the UK with and they've spent more than they've earned. And very few of them are saving any sort of money. And people are slipping further and further into debt. And the UK research mirrors exactly what you're saying, which is people don't understand the world of finance. They haven't got the time to learn, and they just want a simple solution. So, believe it or not, that's actually where I wrote a book about this after that sort of 10,000 person user research, and in that book we're focusing very much on traditional finance, where it's sort of put your money into index trackers. It's better than trying to day trade and beat the kind of overall index. And it was, so I sort of almost done that, but I was looking for more innovative, more engaging areas of finance. There's so much kind of, interest, money pouring into the crypto space, and there's only really professionals within it at the time who are actually making any money. It just looked like a complete open goal, because there was this seemingly huge market which has now grown to sort of $3 trillion in value, and it was just super complicated. And there was no, for the average person in the street, there it was completely impenetrable. You could go maybe and buy, you could buy the next speculative coins through some of the big exchanges that have been very popular. But if you wanted to earn interest on that and do it on earn interest on what was a sort of a stable underlying base asset, which is what we think is super popular, where I think the best kind of crypto for your average investor is effectively one that's pegged to the US dollar and earns a 12% yield, because you haven't got that huge volatility that you see in things like Bitcoin and Ethereum. But no one was doing that well. And given the size of the prize, that to me was the easiest sort of area to grow into within finance. And so I guess another area was that there weren't enough people doing it in the world of traditional finance, having come from robo advisory and things like that. That's trying to solve this industry. It's a really, really crowded space already, and the margins are terrible. The business, you look at the business models and it's costing them thousands to acquire customers. We're ending up with, the actual yields that they're not the margins that they're making are tiny as well. I can't see a lot of these robo advisors ever being profitable. But in the kind of explosive world of crypto, there's this huge opportunity. They're high margin businesses, and they're rapidly growing. And it's almost in the best interest of the customer and the company to continue in that space.
So for a layperson, what is a robo advisor?
So robo advisor, in its simplest term, is you go onto a web portal or an app. You answer a few questions around your kind of risk tolerance. So, do you like volatility? Would you, if you had money in stocks and shares, would you be worrying about it all night? That sort of thing. And on the back of it, it will build you a portfolio of traditional investments. So if you'd said, look, I'm really cautious, I would worry all the time if I had money in kind of anything that was volatile, you'd probably end up in a basket of kind of bonds or fixed income and cash, which would be yielding, probably negative compared to inflation right now. Versus if you went through the same kind of thing and said, look, I'm comfortable with risk. I want to, I'm aiming for high returns. I want to try and, I don't mind the volatility, that sort of thing. You'd end up with a portfolio that's been recommended to you that's like 100% in stocks and shares. And the idea was these robo advisors are doing the job of a financial advisor. They're more scalable, they're cheaper, these sorts of things. And it's a way of educating and advising the masses without the same cost.
So I'm curious about that. Like, this is the one thing that, I'm somebody that is very sensitive, but one of the big areas of my focus is consumer behavior. And I'm very sensitive to how confusing the world is for people right now. And, with the rise of cryptocurrency, you talked about the issue of volatility. And I think that, if I was to take a headline about cryptocurrency, it's volatility.
Yeah.
And I'm sure a certain percentage of the audience, that's part of its appeal. It's swinging for the fence, it's rolling the dice, seeing what. But I'm curious, like, in a way, for the average Joe that wants to invest, it seems like a fairly scary step. I mean, yeah, it's kind of sexy. It's getting lots of press. But if I can invest in a bank, or I can invest in Coca-Cola, which I see on my shelf or I see in my high street, what does it take to convince, or why should the average person make that step across into cryptocurrency? Where's their certainty? Obviously, there's no certainty in investment. I appreciate that. But where's the certainty that this isn't just going to blow up tomorrow?
I mean, the first Bitcoin was mined in 2008, and pretty much since then, or at least over the last 10 years, it's been the best. Crypto's been the best performing asset class out there, but there's just, most people have very little exposure to it. You're absolutely right that there is. I think a lot of people who invest in crypto today it's their kind of fun money. It's the money that they're putting in there. They want to have, it's a very, very small. It's almost money they can afford to lose. and they're hoping they're going to just 10x it or 20x it in the next month, and invariably it doesn't happen. You get all sorts of kind of companies that you wouldn't think have got very good long-term prospects that just because they're in crypto they're going up. So we're trying to change that, and I think in order to bring the masses into crypto, the behavior around it needs to change. And what we're trying to look at is we want this to be 5 to 10%, and that's what we're talking about. We're talking about like 50, 60%, 5-10% of a diversified portfolio we feel should be in crypto, because and not all of it needs to be in Bitcoin and Ethereum and sort of highly volatile tokens. So when what we're finding is the people who are coming from into crypto for the first time and are coming from the traditional world of finance, they are attracted to these lower volatility coins, these US dollar pegged assets. And then they might have a small percentage of what they hold with us in Bitcoin and Ethereum, which again are earning 7% yield, as well as all of that volatility, which is hopefully over time, seeing their kind of account balances increase. So we're aiming for the more traditional investor. And I think, so it's the market that we're targeting is very much a subsector of the overall crypto market. That we are not intentionally don't have hundreds of coins on our platform. We have the coins that have been around for 5 years minimum, and the ones that we think have the highest chance of being around in 5 years' time. It goes against my ethos, everything I've tried to do in my career, which is improve the financial well-being of the people I come into contact with. I don't believe in get rich quick schemes. They invariably do implode, and we've seen that happen time and again in crypto. But you've seen Bitcoin, Ethereum, and stablecoins, high yield, giving really, really good yields, and having a degree of longevity, use case, all these sorts of things, and they are permeating sort of everyday life. And that's what's required, I think, for this to go more mainstream. So, I think there are subsectors within crypto. We're looking for the professional investor within crypto, not the one who's trying just to get rich overnight, because only a very tiny percentage of very fortunate and lucky people will buy at the right time, sell at the right time, and get out and cash out. Most people keep going until they, chase it down to zero. And so,
what I love, there's some the pieces you just put together in your response there. I love is the fact that from where you're coming from, you've always tried to basically represent the interest of the investor, and make sure that they're getting the money that they need. It's not about, that's part of the, with respect, part of the reputation of your sector is it is a bunch of people that are drinking champagne out of stiletto shoes, and they're not that concerned about their their customers' money. It's really about making money for themselves. And what you're describing is that has always been a primary driver. And so you've entered this space of cryptocurrency, which is highly volatile, which has all kinds of unknowns, all kinds of new players that enter. And what you're trying to do is create a safe space for people to enter a part of the market that is, from your perspective, stable relative to what's happening out there and can produce a decent return.
Yeah, that's exactly it. And I think with all the sort of startups that you have there, being laser focused on your target customer is important, as I'm sure you've said on the podcast. So it is a subsector of the crypto market that we're after, and we really, and you'll see it in everything that we do, the way the product's built, the user experiences that we have. We're not flashing charts and things that are going to encourage people to trade. It's not even our business model. So we don't make money when people buy and sell crypto aggressively. If you think about the big crypto exchanges out there, they're encouraging people to trade because that's how they make money. They make money when you go from one coin into another. So the more coins they add, the more they hype up the next big coin, the more likely you are to jump in and out of stuff. We don't make our business model isn't that. We make money and we share in the yield that we generate on our customers' crypto. So if we're not making yield for our customers, we're not making money as a business at all. So we are completely aligned with the interests of our clients, and it's operationally expensive for us when our customers jump in and out of stuff. So we're trying to discourage them. We're looking for longer term investors, and all the work I've done in traditional finance You only need to look at any of the websites from kind of your trading platforms in stocks and shares. They generally have a risk warning on the bottom that says, be aware, over 80% of our customers lose money. Yeah, that's not a business I want to be in at all. I want to be in where it says, high 90% made money, and the reason the people didn't make money is because they jumped out at the wrong time, and they didn't want Bitcoin and they clicked on the So we want long-term investors who are looking to build wealth, not short-term speculators.
A lot of people that are going to be watching this are probably going to have different levels of understanding and information available to them about what cryptocurrency is about. So just to get the question out of the way, can you explain what is cryptocurrency, where did it come from, what is its utility, and why is it important?
So one of the big challenges that was overcome with crypto was trying to develop a system where you can move value between people, institutions, in a frictionless way that cannot be censored or anything at all. And that's where blockchain comes in. So imagine there's millions of people around the world, all of whom are supporting the blockchain, which is really just a public ledger of who owns what within the system. And because it's distributed, because there's millions of people who support it, you take out any one of those people, it exists, it persists, and they jump around elsewhere. So it's this permanent record of who owns what within a system. And Bitcoin and digital currency is obviously the most popular or well-known sort of manifestation of that market, which is Bitcoin has a value that people perceive, and you can transfer that value around this network without getting any other intermediaries or any other counterparties involved. So it's completely frictionless between counterparties. So that in itself is valuable. I mean, if you think about my co-founder Digby came from the world of payments, and you look at the world of traditional banking. If you're sending money from one country to another, it's often going via several banks, and there's costs incurred. It's slow. Whereas with crypto, you could send almost an infinite amount of money between counterparties with a click of a button, and it would take seconds. And so that kind of efficiency gain that you're getting from the world of crypto is its biggest value, the removal of intermediaries in any kind of financial process.
So is crypto a response to traditional banking sector?
I think it is. I think the biggest response, the biggest reason I think why it gained so much popularity recently was around what is value in currency. So, I mean, I haven't got the exact figures off the top of my head, but just with COVID, with the financial crisis, just how many in dollar? I'll pick on the dollar, but you could almost pick on any currency. How many more dollars there are in circulation today than there was 10 years ago? So, in a response to try and bail economies out of trouble, central banks have just been printing money, and at some point we're starting to see it happen now. That sort of got to come home to roost, where inflation, the value of the buying power of the dollar is decreasing and decreasing over time. And, we're now starting to see that with inflation rates in major economies, coming in at kind of 4 to 7% most recently. So the big thing about Bitcoin is there is only ever going to be 21 million Bitcoin, never going to be any more. The system has been written, the code has been written on the blockchain, it can't be changed. So there will only ever be 21 million Bitcoin. So the supply is fixed. So you can't print more. So the argument is that gives it value, the fact that the supply is always going to be constrained. But as with anything, it's sort of, from an economic perspective, the supply, you need to know the value of something, it's sort of supply and demand. So we know the supply is fixed at 21 million. And at the moment, as Bitcoin is becoming more used in lots of different areas of everyday world, we know that demand is going to increase, which sort of makes the equations it's increasing as the single side of the equation, so it's going to push the price up. Is the rationale for it? You've got to think at the same time. Bitcoin was the first, by no means the last, and you may find better ways of moving value around. But a lot of people believe that Bitcoin is the holy grail of kind of value distribution or moving value around the world via blockchain. So, yeah, I think
what's interesting about sorry, go ahead.
I think I'm probably waffling on a little bit there, but it's more okay. Yeah, I think
No, it's interesting. I think that this is the kind of information that the average person needs. Like if you're trying to reach the average investor, it needs to be, as straight as that. So, at the end of the day, underpinning a lot of the strength of currency is the confidence one has in that currency.
Yeah.
Right. The reason that the U.S. dollar is so powerful is because people believe that it's the most stable economy in the world. Asterisk that. We'll see in the next few years. But, one of the things that is inherent in cryptocurrency is its instability, right? And certainly, I would count myself as a layperson. My impression is that, when you describe Bitcoin, it's limited to 21 million coins. And then you're right, demand will drive the price up. So if you're an investor, happy days. But with all of these other forms of cryptocurrency coming out, it's the Wild West. Like, where's the confidence to be gained to have an investor feel comfortable that those are going to be lasters, that they're going to be around to make sure that their investment's protected?
Yeah, I think it's a really good point. And I think there are tons and tons of there's this huge amount of innovation, and a lot of these coins are someone has an idea and they spin something up in a month or two. It's a new coin and they put it out there to see if it works. There's nothing inherently wrong with doing that. This is they think they've got an idea of a way that a crypto coin should work in the world that will add value, and it's their experiment, and you can launch that experiment fairly cheaply. It's not. And it's like launching companies, speculatively launching companies. So just like you wouldn't necessarily, a lot of investors wouldn't invest in a highly speculative startup. A lot of investors in the world of crypto shouldn't be investing in the newest coin that comes out, because they can expect the same sort of hit rate that you'd get in early stage startup investing, which is probably 1 in 10 if you're a decent VC who's done his homework or her homework. So I think it goes into the same. You've got to have the same approach to investing, doing your own research, really thinking about the use case of the coin that you're looking at. And to be fair, most people don't have the time or inclination to do this, which is why we don't have 50 coins on our site. We have 3. We have stablecoin, we have Bitcoin, and we have Ethereum, because they are the biggest, most stable coins that are currently out there in the world of crypto. And we've got the highest confidence that they are, of all the coins that are out there, that they're the ones that are going to be here in 5 years' time. And as and when that changes, we'll probably add more. But it's, there are some amazing projects that have gone from very little usage to, making to businesses that make millions of dollars a week, from borrowing and lending, from setting up amazing businesses. But, they get the pace of innovation means that a lot of them that were there and leading the market with billion-dollar market caps 3 or 4 years ago are falling out of favor now, and are sort of 75% of the value of their coin has disappeared. So it's, you've got to be careful. So, and you've got to approach it as you would investing in the traditional markets.
I hope you enjoyed this first part of our interview with Phil Blows, co-founder of AQRU, a cryptocurrency platform that helps investors find consistent results with this highly volatile asset class. Stay tuned for more on how Phil went about creating a new direction for his career and the market.